Hello everyone and welcome to Smart Investing. I'm Albert and today I'm going to be hosting the video based on the financial sector. And to detail the financial sector, I'm specifically going to be talking about the banking sector and continue the videos for this series. So today I have 15 stocks. I'm going to be going over them fairly quickly, so I won't bore you guys. So again, I'm going to be using the Webull app, which I usually do. I have my stocks on the left hand side right here. And then I have a second page open to show you a better visual feature so you guys can actually see the numbers. And this one I'm using for the chart. Again, it's the same website, the Webull app, but I'm just showing two different perspectives. One is the chart and the stocks, and then the other one is more with the basic info about the company. So let's begin. First one that I have on my list, so let's go to the first page, is Hawthorne, HWBK. So HWBK, let's look at if they pay any dividends. So they do pay dividends, increasing dividends. Let's see, 2019. They do increase. It looks like they do increase, but very slowly. Again, you can see they increased in 2016 from 5 cents to 6. Then 2017 from 7 to 10 cents. Then you can see the following numbers from 10 cents to 12, from 12 to 13, and 13 to 15. So it looks like maybe a 2 to 3 cents increase every year, which ain't bad. Let's look at any splits. In 1999, that's like 20 years ago at least, so that's good. So as you can see, they are part of the bank sector and banking services sector. That's the secondary title for that stock. So let's look at where they're located. Let's read a little bit about them real quick. So obviously, okay, they do internet banking, they do debit card, certificates of deposits, trust services. Trying to just skim through all this. Let's read at the bottom. Hawthorne Bank, Jefferson City, IHC, Hawthorne Real Estate, LLC, and Hawthorne Risk Management. It doesn't say the location. It would have been nice to say more or less where they are located, but you guys can look into that. I'm not gonna spend too much time. So what I have here on the 1-year chart, right here looks pretty flat. Well, actually, let's do it in zones. So the first, let's say up to here, they dropped down, then they went up, then they stood pretty flat. So around here, you could say a lot of points touch this mark right here. So we're looking at about $20. So around, let's see, around May, they broke the trend for the $20 mark, and now the new zone was, let's say, about $21.85. They broke that. Then the next level is about 22.65, and they broke that level. Then another dollar increase, 23.60, and they broke that level. Now you can see it's coming back down towards like the last month. See, it's coming back down. So I said 2360. So if it reaches there, it might go flat. And again, if it goes under the 2360 mark, then that might be an opportunity to start buying in. So we have really low volume, not a pretty high number for the 52-week high. Market cap is $160 million, pretty much. Now let's look at this chart real quick. So it looks like it's under the 20. And once it reaches below the 50, I think that would be a good sign. Once it kind of reaches near the 50 MA. Next stock I have is Fifth Third Bank. It almost looks like Fitbit, but it's not Fitbit. A more detailed chart I have. Hopefully it loads. Load. It failed. I don't know what's going on, but whatever. I have my chart on here. So the numbers that I have for Fifth Third Bank are market cap 492 million. Volume's pretty low. PE is pretty low at 8. Now let's look at the locations. Let's look at the bottom. Company operates through 4 business segments: commercial banking, branch banking, consumer lending, and wealth and asset management. Let's look through here. Okay, so they're located through the Midwestern and Southeast. So there are a few states that they're in. So that's not too bad. I apologize that I do not have this chart. I don't know what's going on. There it is. Now the chart is coming in. Let me try and refresh. So there we go. I have the 1 year chart, sorry. So it dropped down, went flat again, went down, went up, went down again. So it looks like it's just trying to fight the 28, pretty much the low $28 mark. So 28 and 30 cents. It touches a lot of points there. If you want to be more accurate, 28.25. So that will look like a nice buying opportunity for this bank. Now let's see their dividends real quick. I don't have much to show you. They do not increase their dividends. And let's see the more detailed chart. So they are below the 200. Wow, they've gone down 1, 2, and pretty much 3 times. I would actually wait this out. But then again, this is not a company that raises its dividends, so it's all up to you. I wouldn't recommend the company, but if you just want the dividends, I don't know. I just think they're better companies than that. If you want to pay a cheaper price, you can certainly wait for it. I have 3 points that have been touching, so you got 1 point here, a second point here, a third point already touched. But the price might even drop further more than that. Let's look at the 5-year. Let's look at the 5-year. Now let's look at the 5-year. So the lowest for the 5-year, so 25 and change. Now let's look at the max real quick. So the lowest it has dropped is This is the past 5 years, so we're talking about 25 and change. So if you want to wait for it to drop at least another dollar or two, you can certainly do that and jump right in. So the next up one that I have CACC. Let's go to that. So CACC, wow, nice chart. Whoa, okay, it is 645. That's insanely expensive. $9.39 billion company. Plenty of volume. 52-week high of that. Obviously they're larger than most banks, but where do they do business? So this is definite. Just from the price alone, you can tell they do really good business. So once you find something good, you kind of want to know exactly what their focus on, what their main focus on. It looks like they like to do auto loans. It says company advances money to dealers. So in exchange for the right to service the underlying consumer loans, my guess would be, yeah, so it says approximately 60,000 independent and franchise automobile dealers. So they work with a lot of automobile dealers. This stock actually reminds me of Ally Bank. Ally Bank actually does more online banking, and they also work with a lot of automobile dealers. So in this case, Ally is actually less cheaper, and compared to the dividends, I'm sure they do pay dividends. I think Ally would be a better bet. But again, let's see if they actually raise their dividends. So I'm going to show you that right now. It looks like I have no data for the dividends. So we're going to move on from that. But again, let's see where they do business. I mean, they're a franchise, so this is all over the US, so that's good. So now let's look at the 1 year chart. I want to see the 1 year chart. It looks like they've been trending higher and higher and higher. So I don't really see many downsides here. Everything looks kind of going up, flat for a little bit, which is normal, and then it goes up. So it's definitely keeping up with the S&P and the markets. So this definitely looks like it's gonna outperform pricing like throughout the year. Hopefully and confidently, it looks like it's gonna do good next year as well. So this looks like a favorite, is what I'm saying. It looks like a popular stock. So basically, from March of last year, well, let's say the beginning of the year, it went from not even shy of $300, so $298, and it jumped all the way to $645. So basically, you doubled your money in 1 year, and it looks like it's nowhere near the 200, and it's just gonna keep going up. So that's all I got for you for this stock. No dividends, and this looks like a growth stock, but it's just insane how much. I mean, even at $300, it's still pricey. I don't think I've ever seen a bank stock that pricey. So this is definitely one of the more expensive stocks on the list for the banking sector. So let's look at the next one, ZIONP. Now let's see this. Let's look at the 1 year. Oh, like this little tiny spikes. That looks like it has a lot of volume. I don't know why it's showing that little bit of volume. It's probably more than that because it's off hours, pretty much offline. When everybody's online in the market, market's open, then it's a way more volume. Market cap is 66 million, pretty cheap. company. I wouldn't say cheap. I just mean it's, compared to their peers and other banking stocks, it's the market cap is just pretty low, way low. It just looks pretty bad comparing to other stocks. That's all. So where do they do business? It says mainly on the West Coast. It looks like it says Cali. I see Nevada, Colorado, Washington. So basically on the west side of the country in the U.S. But it also says primarily in the states of Arizona, Cali, Colorado, Idaho, Nevada, New Mexico, Oregon, Texas, Utah, Washington, and Wyoming. So yeah, basically on the West Coast, which is pretty cool. Those are major markets and major cities. So let's look at what do they focus on? Commercial, the typical wealth management and real estate banking, and yeah. So just the typical. So now let's look at the dividend. Dividends are the same. They have not pretty much increased. Just a regular stock paying dividends and no increases. Now, capital appreciation, basically on the pricing, it looks like it's remained the same. So the start of the year, it's at 24, and all the way to just pretty much not even a dollar, or basically just a dollar. It has increased for the year. So you pretty much stayed the same with the same amount of money that you have invested. So this doesn't look like a popular or a hot stock. It jumped up in June. It kind of jumped up to maybe $2 higher, and that was pretty much it. That was the only momentum that it had. So that was pretty much it. So now we look at here, yeah, pretty much the same. Next up, I have OPOF. Let's look at that one. Old Point Financial. Let's look at the 1 year. So not too bad, up and down. It's gone up. It looks like, okay, North America. It doesn't say where, so I'm guessing they're scattered through the US. Doesn't say where exactly. So from the start of the year, it's gone from, let's say 17, and then right now it's at 23. So $6 difference. That's not much of a big difference for the 1 year. So let's look at the dividend payments. I know people love that. They have made increases, only a penny, and this looks like it's been every other year, only 1 penny. That looks pretty cheap, in my opinion. That doesn't look like a big increase. So let's look at the next stock. So again, I'm not too crazy about this one, so I don't like this one. So let's look at the chart. It's under the 200. It looks like it's going to break the 200. So right now would be a good time to buy this stock before it jumps only maybe $1 or $2. So that's pretty much it. From what I'm seeing. So next one that I have is WVFC. Let's look at the 1 year charts. I don't like those flat lines. That looks like there's not a lot of volume. This is only a $29 million company. So awful company, still has more growing up to do, needs more of a market cap. Unless it gets bought out and acquired. So this is basically, the location is Pennsylvania Bank. They like to insure. So basically they're a bank that does FDICs. they do deposit insurance, corporations, insured stock savings bank. So that's a good focus to do.